Hello everyone and welcome to my morning report analysis videos of me, which market analyst at Hantec Markets on Monday 8th of October. We've had a very sort of risk negative continuation of the markets today. What we have seen is Italian bond yields continuing to climb. There are concerns over how the populist Italian government are sort of really treating this situation, not really helping risk appetite at all through the markets, and that is hitting again today. You've got no US bond markets open today. You've got Columbus Day in the States, and bond markets in the States have tended to be sort of driving sentiment in recent days, and that sort of takes that element of driving force out of the market, so markets are focusing elsewhere, hence Italy coming back into the back to the fore there today. We've also had a reserve requirement ratio cut by the PBOC, and the impact that that is having is that it is weakening the Chinese yuan, and again that's playing into a stronger dollar. And what we've seen is the dollar basically strengthening across the G4 majors. We've got the euro and sterling, the main ones. Interesting that we've actually seen the yen outperforming, and that outperformance of the yen is coming, as I said, sort of almost like a safe haven move. You're seeing a weaker gold price, gold back below $1,200 again. Risk aversion, you can argue in the fact that risk aversion has tended to be dollar positive. You could argue that the gold price is also benefits on risk aversion, and maybe that is helping to hold it up. But if you look at the performance, not necessarily today. Equity markets under pressure across the board, as Wall Street closed lower 0.5%, and also futures are lower today, 0.3%. So it's generally a pretty negative looking outlook today. Dollar remains pretty strong, but also look at the VIX volatility. Yes, sort of up again today, so it doesn't look all that positive for risk sentiment. No major data points today, so we're sort of pretty much as is set. And as I said, you might get less of an impact from US markets, considering bond markets are not trading today. Now, my chart today is the sterling yen. Now, what we have seen is prospect of Brexit improvements, and negotiations have just taken a little bit of a turn for the better in the last couple of days. Although you wouldn't look at it, you wouldn't say that looking at how sterling's sort of 60 odd pips lower against the dollar today. Euro sterling basically flat, but sterling yen is lower. But you look at this outlook and you think, well, this I think is an improving chart still. You sort of zoom out and you can see this downtrend back from January, February has been broken, and the market's sort of holding up above 147. That's becoming a pivot. This old pivot line becoming again renewed pivot support. So any drop back towards that, and you've got this uptrend that comes into play as well. I think this little corrective move could actually give you a nice little buying opportunity. I don't necessarily see that if the market, say for example, closed here. You could say the near-term prospects of a negative candle move, such as bearish outside day, would be sort of dragging it back possibly towards the uptrend again, and indicators you could argue with MACD lines crossing over. But generally speaking, I think that this is a correction within the uptrend, back towards 147 support, back towards the old support, the old downtrend, which having broken to the upside has become supportive. So I think this is a corrective move that I think the market is still building for sterling strength in the coming weeks, as you're likely to see some positive news on Brexit, which would drive sterling higher. Now above 150 is the breakout, it's the key breakout confirmation. 149.70 is initial resistance. Again, pretty much tested early doors today. Fell back on that, but as I said, I think this is a little corrective move that I think would be a buying opportunity. So with that in mind, I wish you good luck in the trading today, and I'll speak to you later.